Toronto's housing market, once an unstoppable force, a symbol of wealth and prosperity, is now showing undeniable cracks. What we're witnessing right now is a shift, a correction, a reckoning. For years, Toronto's real estate was like a runaway train. Prices soared to unimaginable levels, fueled by low interest rates, foreign investments, and an insatiable demand for housing. The market was red-hot, homes selling within days, sometimes even hours, well above the asking price. Landlords could demand astronomical rents, and tenants had little choice but to pay up or get left behind. But nothing lasts forever, and the signs of change are now impossible to ignore. Interest rates. The Bank of Canada had no choice but to hike them aggressively to curb inflation, and that sent shockwaves through the market. Suddenly, those massive mortgages people took on at rock-bottom rates became unsustainable. Monthly payments ballooned. Many homeowners, especially those with variable-rate mortgages, found themselves in financial distress. Some started selling, while others held on, hoping for rates to come down. And now, the inevitable is happening. Interest rates are starting to drop. But will that be enough to save the market? Or is it too little, too late? Let's talk about the rental market. For years, Toronto rents were completely out of control. Landlords charged whatever they wanted because there was always someone willing to pay. But the tide is shifting. Rent prices are finally coming down, not slightly, significantly. We're seeing more vacancies, more rental incentives, and tenants finally getting some leverage. And why? Because people are leaving. The cost of living is high, wages aren't keeping up, and many have had enough. Some are moving to smaller cities, others are just leaving Canada altogether. And with that, the once booming rental market is starting to stall. Then there's the issue no one wants to talk about: rents not being paid. It's happening more than ever before. People are struggling, and when push comes to shove, food, transportation, and basic survival come before rent. Evictions are on the rise. Landlords are feeling the pressure, and the system is showing signs of breaking. Toronto's housing bubble was built on the assumption that people could always afford to pay, but that assumption is proving to be dangerously flawed. So where does this leave us? What's the upside in all of this? Well, opportunity. Prices are coming down, and for the first time in years, buyers, real buyers, not just investors, might actually have a chance. With interest rates on the decline, those who've been waiting on the sidelines could finally step in. Developers are slowing down new builds, meaning supply will tighten again in the future. And for renters, the power dynamic is shifting. More options, lower prices, and better deals on the table. The market is finding balance. Toronto's housing market isn't dead, it's evolving. We're moving away from the frenzy of the past and into a more stable, sustainable future. It's going to be a painful transition for some, but for those who are patient and strategic, the next few years could bring major opportunities. The question now is, are you ready?